Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week, we're covering tips for splitting refunds when taxpayers divorce. Spidell has a 2-hour on-demand webinar on divorce tax planning that covers community property and income splitting, the specifics on what is community property and when the community ends, and more. You can see a full list of what's covered and register at caltax.com under webinars. The FTB generally applies any estimated tax payments existing on a joint account to the first taxpayer who files a return and claims the estimated tax credits. This policy favors the spouse who files first. If your client is the second spouse to file and claims the credits, the FTB denies the claim and tells the second spouse there are no payments available on the account. In 1997, 2 court cases found that taxing agencies are required to abide by prenuptial agreements. In light of these cases and the number of problems created for the FTB when there's a dispute over a refund, the FTB has a procedure your client can use to segregate shares of the refund. The FTB makes every effort to apply estimated tax credits pursuant to the terms of a court order if the taxpayer notifies the FTB in advance. If the FTB is notified before the tax filing season, the taxpayer's joint estimated tax payments can be allocated correctly to each individual account. You should send the FTB a copy of the court order allocating the payments to your client. In the absence of a formal court order, the FTB will accept a statement showing the allocation of the payments along with the notarized signatures of both taxpayers. You should send this notification to the FTB prior to the tax filing season. But if you have a client who needs to send the notification during tax season, we suggest you send it as soon as possible and try to file as early as possible to avoid future problems. If the FTB receives and processes the request before the former spouse files their return, the FTB will apply the payments according to the terms of the court order or allocation request. But keep in mind that correspondence takes a lower priority to processing tax returns during the filing season, so it's possible that the FTB will not enter the information into their system in time to make the adjustment. If the FTB applies the payment to the former or soon-to-be former spouse and the money belongs to your client, you'll have to request the refund as soon as possible. If the FTB refunds all of the estimated payments made on a joint voucher to the first spouse to file, even if that spouse does not claim the payments, call the tax practitioner hotline to request the refund. Both the FTB and IRS offset personal income tax refunds to pay delinquent child support payments. Also, a California spouse may still lose their federal refund because of community property rules, even when allocation is requested. When one spouse owes back child support, the FTB will offset the liability with up to 100% of a couple's joint refund to pay an individual spouse's back child support. If you want to protect your non-liable client, we suggest you file separate tax returns for both federal and California. This should, but might not, protect the non-liable spouse's refund. Also remember that you are generally required to use the same filing status for federal and California purposes. We also cover this topic in Spidell's analysis and explanation of California Tax's reference manual. You can order a print or online version, and you'll receive periodic updates to the manual during the year. Pre-order the 2024 edition now at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.